I think that's what we'll be dealing with today. Okay, we are going to be looking at the second method. You can never tell which one will be given to you or which one we are going to face in the exam, whether the one we did the last time out or the one in a tabular form. So that is why we need to understand all of them so that whichever one is presented to us on the day of exam, we should be able to maneuver our way out. So I think that is basically what we'll be looking at today. And I hope we all have the document that we used the last time, the one containing that 38-page Word document containing the practical questions from all the topics. I hope we all have them, right?
Yes, please.
All right. So, Buddy, somebody say no.
Yes, please. Kindly share again.
Hey, you don't have the document?
No, please.
Please, I cannot hear you. Oh.
Some of us just joined. Which document are you talking about?
Did you join the discussion we had 3 days ago?
No, please.
And that's the reason why. So let me just reshare it on the accounting. I'm going to reshare it on the study page. Okay, only the study page. So kindly go there and check out check it out.
Thank you.
All right. All right, so it's on the page now. Okay, so if you don't have it, you can kindly go to the study page and open that that document. So the last time out, we did we were able to solve question number 8, and then the next question, which is question number 9. The next question, which is question number 9, is what we'll be dealing with today. Okay, so please let us prepare ourselves. All right, so let me see whether I can share my screen. And first of all, let me come. All right. So let me first of all record the class.
I think someone is recording it already.
Someone, okay. But
Maxwell.
I mean, okay, Mr. Maxwell is recording. If he's recording, that is not bad. I mean, it will be good if we have 2 people recording, because you can never tell what will happen.
Sure.
So let me. All right, so welcome again to today's discussion. I am your moderator, Hassan, and as usual, this is a discussion. This is not a tuition, because I cannot teach you. We're only here to discuss, okay? So let's see what we can learn for the night. Okay, so the last time out, I think we had somebody who was doing the reading for us, and I think today is not going to be different. I think we need one volunteer to be doing the reading for us, whilst we also do the what? The analysis and then other stuff. So if we can get somebody to do the reading for us, I'll be very grateful for that. Okay. Yeah.
Okay, let me read then.
All right. So you can read question number 9. Let's see.
Number 9. Okay.
Okay.
Below is the summarized statement. Oh, it's off. Okay, let me get that. Did I read from your screen?
No, I mean, you have the document. So you just open the document from your end and then be reading there. Okay.
Okay.
Yeah.
So please, which page did you post the document? Because I can't find it. Still posted it on there.
On the study UGBS 205, the study page.
Okay. Thank you.
Yeah. On the study page, not the main platforms, on the study page. Please, are we all there?
Yes, please, we are there. May have printed it out, so I have that copy.
All right. All right. So let's see what we can do for the 9th. Okay. Made, please, are we there? Made.
Can I read it?
Yeah, I think somebody can step in.
Can I read it?
Yeah, we can hear you.
Please.
Okay, below is the summarized statement of financial position of HASSAN'S Limited for the month of August, following the changes over the period. States clearly that. Please, can you hear me?
Yeah, we can hear you.
Following the changes over the period, states clearly the transaction that led to the change in the financial statement at each point in time.
Okay. Okay. So you can, as you can see, okay, this question is not demanding you to write the effects of the transaction on the accounting.
Limited.
Hello.
Okay. For the amount of August, following the changes over the period.
Right, sure.
Hello, please, can we all get our mics muted? Please let us all mute our mics, okay? Thank you. Please let us all mute our microphones. All right. So, as I was saying, okay, this question is not demanding us to write the effect on the accounting equation, but rather to state the transaction that led to the change in the financial statement, okay? So when we have a question like this, we have a full table, full of figures. I know some of us are allergic to figures, but this is not the time for us to panic, okay? This is just, something very easy and something very entertaining for us to get some marks, in our exams, okay? So basically, when you have a table like this, okay, what is going to happen is that, first of all, you look at the table, okay? from the beginning, we have assets, right? And under the asset, we have premises, plant and machinery, inventory, receivables, cash and bank. All of these are what? Assets. And then beneath it, we have what? Total asset. I have intentionally colored the totals to tell you guys something, okay? So we have total assets beneath them. And then after the total assets, we have equity and liabilities. And then we have equity. Under that, we also have liabilities, loan and payables, right? So these are the items, and you have figures for them, okay? And also at the top here, if you can see, we have A, B, C, D, E, and F. So what this A, B, C, D up to F means is that they are financial years or they are accounting years. Are you getting that? So the A, sometimes you may see 1, 2, 3, 4, 5, or A, B, C, D. So the A stands for what? Accounting year A, accounting year B, accounting year C, accounting year D, in that order. Are you getting me? All right. So now, if you take this table, first of all, you have to bear in mind that we don't need the total columns, okay? This row, okay, the total, I hope you guys can see my screen, right? Are you seeing what I'm doing on my screen?
Yes.
Yes, sir.
Yes.
Yes.
So the total row, which is total asset, we don't need it. We don't also need total equity and liabilities.
Yes,
Any
sir.
totals, we don't need it. That is the first thing you have to keep in mind. We don't need any totals. That is one. And secondly, after bearing in mind that the total columns are not for you, I mean, it's just there, but you don't need it for anything. That is one aspect. And second aspect is that you have to take this row or this column, the one that I'm highlighting. You can see that one, we have not numbered it or we have not lettered it. It's just empty. So this shows that this was before business commenced, or this was before business started. Are you getting it? And then A, year A means what? This is our first year in business. Please, are you following my explanation?
Yes, please.
Yes.
So the one which is empty means like business has not begun yet. And then A means that this is our first year in business. Are you getting that? So what you have to do is that we have to compare A as against the empty one here. Okay, we'll compare for premises. We'll compare 12,000, 12,000. So when we are doing the comparison, we always take two columns, okay, and we compare them. That's what you have to keep in mind. We always take two columns and you compare. Where there are no differences, you don't have interest. Your focus or your attention should be where there are differences. Where there are differences, that is where the work is. But if there are no differences, there's nothing for you to do. Also, totals, there's nothing for you to do at the totals column or totals row. So we are only interested in where there are differences between the figures. For that to help us arrive at the transaction that was involved in that case. So in this case, we'll compare A against the empty cell. When we are done, we'll do that to the end. When we are done with that, we now come and compare B. Okay, we'll compare B as against what? A. The same thing that we did, we'll do it here. And then when we are done with A and B, we'll drop A and we'll now take B and then what? We'll now compare B and then C. Are you getting that? When we are done with B and C, then we drop B again and we'll now take what? C against D and we'll compare the two. Are you getting that? The same thing that we will do. We drop C again and we'll pick D and E and compare the figures to up to the last, and which is what? F. So this is what we are going. This is what we are going to be doing for the evening. Okay. So this table has been presented to us. and we are asked to state the transaction that was involved in this case. So now, let us start with the first column, which is the empty one. We are comparing the empty one as against what? Year A. Are you getting that? And as I mentioned to you, just assume in your mind that the empty column, which is this one, we assume that we had not started business by then. And then year A is our first year in business. So now, look at something. Taking premises row, no, okay? We have 12,000.
Please, you are muted.
Okay, please, can you hear me now?
Yes,
Yes,
please.
Yes, please.
So I think the administrator muted everybody because of the noise. So I mean, no problem. So let's continue. So as I was saying, taking the first row, which is premises, okay. Look at the figures there. 12,000, 12,000. Has there been differences between these two figures?
No.
No, there's no difference.
So if there's no difference, do we have an interest here?
No.
No.
Remember, we are only interested in where there are differences, right?
Yes.
Okay.
Yes.
So let's move down. Let's move downward. This one, has there been differences?
No.
Has there been differences here?
No.
Yes.
Has the inventory? You can see inventory. Has there been an
Yes, there's a
okay.
difference.
What is the difference for this? What is the difference? 450 cities, right?
Yes, please.
So if you have seen that there has been a difference of 450 cities, now let's see what happened. Inventory initially was 750 cities, right?
Right.
But now it has increased to what? 1,200. What does it mean to you?
You bought
This means the business
Asset
450.
reduced.
Pardon?
The business has
Advantage.
It means there has been a profit.
Not necessarily profit. Look at the thing. So we assume that the first place, please pay attention here. It is assumed that here we only started business with 750 goods that was valued at 750 cities. And then year one, the value of our good has increased to 1,002. It means that we have added goods to our stock. Please, are you getting the narrative?
Yes, please.
Right?
Yes.
It means we have added goods to our stock, right?
Yes.
Aha. That is why our stock has now increased. If you haven't started, if you do not add goods to your stock, do you think your stock will increase?
No.
Are you getting it? Your stock will only increase when you add more stock, right?
Yes.
So here it means that we have added what? Stock to our what? To the already existing stock that we had. So now let's see whether we bought this stock or whether we bought this stock on credit or we bought it with cash. Let's see. Let's look at receivables. Has there been change under receivables?
No.
And I believe you know the meaning of receivables, right?
Yes.
What is receivables?
Yeah, money is people owing business.
Our
So receivables, receivables are money. So let me say debt. Okay, they are monies that people are owing us. So once the receivable has no change, let's move. We don't have an interest there. Let's look at cash and bank. Has there been change under cash and bank?
No.
No. And the next one is what? Totals. And as I mentioned to you, we don't need totals, right?
Yes.
So we skip it. Let's go to equity. Has there been change under equity?
No.
All right. So if there's no change, let's move down. Loan, has there been change?
No.
All right. So let's move down. Once there's no change, we don't have an interest. Let's go to payables. Has there been change?
Yes.
Yeah.
What is the difference here?
450.
450 cedis again, right?
Yes.
Okay. All right. So if that is the case, look at something. Goods increased by 450 cedis, right? Here, our inventory increased by 450 cedis, and the same time or the same year, our payables also increased by 450 cedis. Who can tell me what happened here?
What the goods on credit?
We bought goods on credit.
The goods on credit.
Buddy?
The company bought the inventory, the goods on credit. The top-ups.
Okay.
They bought the
Okay. So you can clearly see that. Let me see. We can clearly see that if you have added stock to your existing stock, okay, and at the same time too, your payables has also increased. What are payables? Payables are monies that you are owing people, okay? So you have added goods to your shop. At the same time too, money you also owe people has also increased. Then a signal to us that you bought the goods on credit. Am I lying?
Yes.
I get it. So basically, with this question number 9, this is what we'll be doing up to column F. Okay, you compare up to the end, you spot the differences, try to deduce meaning from that, and you write that meaning as the transaction. That is all. So let's see what we are going to write here. Once we have seen that we have bought goods, we have added stock, and also money we also owe our suppliers has also increased. It means we bought the goods on credit. So the only thing for us to write is to write A. Bought goods or inventory. So let me use the word bought inventory with what was the value of with how much?
450
cedis on credit, right?
Yes.
This is the statement that it is expected of us to write for what we've just done. Somebody will write credit purchases 450 cedis, and that is all. Just 3 words, and you are done. Bought goods or bought inventory with 450 cedis on credit. We are done with A. Let's go back to our table. As I mentioned to you, so we have just done the empty column as against A. Now we are going to drop the empty one, and we will now take what? A and B, and we'll compare these two. So now let's start with that, and let's see. A and B. Let's start again from premises. Has there been change under premises?
No, please.
How about plant and machinery? Has there been change under plant and machinery?
No.
Okay, let's go down. What about inventory? Has there been change?
Yes.
What is the change here?
500.
And what do you think happened here? Has inventory increased or it has decreased?
It has decreased.
Inventory has gone down, right? It has decreased, right?
Yes.
So if inventory has gone down, what does it signal? It means goods has gone out of the shop. It signals what? It means maybe we made some sales, right?
Yes.
Because when your goods are going down, it means you are selling. When your goods are going up, it means you are buying more to add to your goods, isn't it?
Yes, please.
So this decline in the value of inventory suggests that we have made some sales. So now let's see whether these sales that we have made was on cash basis or it was on what? Credit. Let's see. Let's go down. Receivables, has they been changed?
Yes.
Yes.
What is the change in receivables?
600.
600.
600 Ghana cedis.
600 Ghana cedis, right?
Yes.
Yeah.
Okay, but so you have seen that we have seen that the value of goods that went out was 500 cedis, right? But and also remember, I explained receivables that receivables are monies that we're expecting from people. Do you remember?
Yes, please.
Okay, so 500 worth of goods has left the shop. At the same time, we are expecting 600 cedis from our customers. Are we getting it? Let's see. So we have spotted the differences under what?
And I receivable.
And the receivables and inventory,
Receivables
right?
and the inventory. Yeah.
Yes.
Okay, so let's go down. What happened under cash and bank? Has there been change under cash and bank?
No.
No, please.
And remember, we don't need totals, right? We don't need totals.
Yes.
So we jump the totals row and we go down, or the totals column. Let's go down. Equity, has there been change?
No.
Yes, please.
Yes.
Yes, they have.
Has there been change under equity?
100.
Yes, please, they
No.
have.
100.
Okay, yes.
Change of 100.
100.
There has been a difference of 100 cities, right? Please shine your eye. Oh, shine your eye.
Yeah.
This one is just watch and write something. That is all. So we have also seen that equity. So the change there is it an increase or decrease under the equity?
Increase.
It is an increment, right?
Yes, please.
It is an increment. All right. So 100 cities. Okay. Now let's look at loan. Loan, has there been change?
No.
No, please.
No, there's no change.
And how about payables? Has there been change under payables?
No.
Yes.
No, please.
No.
So you can clearly see that. Oh, what happened here? I've not. You can clearly see that we have spotted the difference under inventory and the receivables as well as equity, right?
Right.
Yes.
Yes.
So now let's see. We have the value of goods that we have in the shop has gone down by 500 cedis. At the same time, we're expecting 600 cedis from our customers. And also our equity has increased by what? 100 cedis. Remember when we were treating accounting equations, we mentioned that when you are making revenue increases your capital or equity. Do you guys remember?
Yes.
Yes, please.
Also, when we are making expenses reduces your capital or equity. So now, let's see something. Goods has reduced by 500 cedis. Receivables has increased by 600 cedis. Equity has also increased by 100 cedis. What are we going to write here as a transaction? Can somebody help us with a transaction? What we can write?
Yeah, bro.
500 cities.
Yeah.
Please, if you want to answer, please, if you want to answer, raise up your hand. I'm going to now start calling people. Okay, so let me see by hands those who want to answer. Peace, do you want to answer? Irene.
Hello. Yes.
Irene, please, do you want to answer?
I've lost. Please, no, it's not an answer that I want to do. I've lost. Well, I don't understand what is going on. Hello.
You don't understand what is going on.
That's what is going on, sir.
Yeah, because I went off, the network went off. I came back. I don't know what is going on. I don't understand it.
Okay, I've heard you. I've heard you. All right.
Thank
so,
you.
Irene.
Okay, thank you.
Irene, please, can you hear me?
Yes, please. I can hear you.
Do you have the question at your end, please?
Yeah. Let me see.
Please, do you have the question?
Just a minute.
Sir, your screen is not showing again.
I have sent the questions. I have sent the question to the platform. So you can just open it from there, okay?
Yes, sir.
Yeah, Irene, you have the question now, right?
Question 9.
Aha.
Okay, yeah.
So that table that you are looking at, okay? Yeah. When you are being given that table, you'll be asked to write a transaction that there will be changes in the figures in the table. So that figures should tell you that something happened, and you write what really happened down as your what answer. Okay, Irene, can you hear me?
Okay. Yes, I'm hearing you.
All right. So in that case, I mean that is the scenario, but keep in mind, total assets, you don't need total assets. Total equity and liabilities, you don't need that one too as well. Please, are you okay?
The network got broken on me again.
So I think your network is not helping you. So let's continue. Okay.
Maybe she can later listen to the recording.
The recording, yeah. So there will be video recording available. So that's the good news. So if you are not with us, don't be bothered. You'll have a video to refer to. All right. So let me see those who have raised up by hands. Yes. Frank Donko, please. Do you want to answer our question?
Yeah, I want to answer.
Yeah, hello.
Okay.
Can I go ahead?
Okay,
Frank, thank you. Yeah, Mr. Frank, please. Do you want to answer our question?
Yes, please. I want to.
All right. So goods has decreased by 500 cedis. Receivables has also increased by 600 Ghana cedis. Equity has also increased by 100 cedis. What does it mean to you?
So it means he sold goods worth 500 cedis for 600 Ghana cedis.
On credit. Please mind you, on credit, right?
Yeah.
Because you can see that there are receivables involved. And once there are receivables involved, it means the goods was not sold for cash. It was sold on credit. Are you getting that?
Yes, please.
Yes.
So we sold goods valued at 500 Ghana cedis for 600 Ghana cedis on credit. You don't need to mention that there was a profit involved. Although we have all seen that there's a profit of 100 cedis in this case, but you don't state it in your question, in the transaction that you are going to write. So now, that is our answer for B. Let's put it into writing. B means that we sold goods, okay, sold inventory, right? Valued, how much was the value of inventory sold?
Hello? Yeah, it's
500 cedis.
So
500 cedis.
500.
And we're able to sold it for 600 Ghana cedis for credit, right? On credit, right?
Yeah.
Yes. So this is what this particular transaction is telling us. So with this table, I think this table is even the easiest of the accounting equations. Just compare the figures, export the differences, and you are able to deduce meaning from that, and you write it as your answer. Okay? So that is what basically we'll be doing when you are given this table. Okay? What we are doing right now is how you answer these questions when they come in the exam. That is in the tabular form. Okay, you just compare the figures, spot the differences, and write what is happening there as your answer. Now we are done with A and B. Now we are going to drop A and we'll pick what? B against what? C.
Hello, sir.
Okay. Yes.
Hello. With regards to the B, but there was a change in the equity. So that one, you don't need to talk about it.
Yes, that's what I was telling you. The equity has changed because there was a profit in that particular transaction. Are you getting that? But you don't need to state the profit in your transaction. Just write goods valued at 500 cedis was sold for 600 Ghana cedis on credit. Any accountant with that particular transaction will know that there was a profit, and it is that profit that made the equity changed. Are you getting me?
Okay, sir. Okay, sir. Thank you.
All right. You're welcome. All right. So now let's do B and C. Okay. Let's do column B and then what? C. Let's compare them and try to spot the differences. All right. Let's start with premises. Has there been change under the figures for premises?
No.
All right. So let's go down.
No.
Plant and machinery. Has there been differences?
Yes.
Okay. What is the difference there?
1,000.
Was that an increment or a decrement?
An increment.
That was an increment. So what does it signal to you?
A profit is made. Increase.
So please increase an asset, right?
Yeah.
So when your assets are increasing, what does it mean? It means you are buying more assets, right?
Right.
Yeah.
It's just like you had one car, that is your asset, and then this year you had one car last year, and this year you are now having what, 2 cars. It means your asset has a what, increase, isn't it?
Right.
Yeah.
Which signals that you have bought additional car, isn't that right?
Right.
Yeah.
Right.
So in this case, we have seen that plant and machinery has increased. It signals that we have bought additional plant and machinery, right?
Yes.
Right.
All right. So let's move down.
Hello, Hassan.
Inventory. Yes.
Hello, Hassan.
Yes, I can hear you.
Sorry, I wanted to find out how we came about the 600 cedis for the first one that we did, the B.
It was under the receivables that we saw that there was 600 cedis involved.
Okay. Receivables. So that's what we use. Yes. We don't use the equity, the increment of the equity.
No.
Okay.
All right. All right.
Okay, Mr. Alasan.
Yes.
Mr. Alasan. Please, can you come again with the answers? I said, can you come again with the answers for the B?
For the answer for what?
B. He said B.
B.
Yes.
Oh.
Yes.
The answer for B is. Please, let's mute our mics, okay? We're getting feedback. Please let us mute our mics. So the answer for B, we said that we sold goods that was valued at 500 cedis, but we sold that same goods for 600 Ghana cedis on credit. Okay, that was our answer for B, because goods reduced by 500 Ghana cedis, and our receivables also increased. And remember, I told you that receivables are what? Monies that we are expecting from what? Our customers, right? So once you are expecting money from them, it means you sold to them on credit. If you did not sell to them on credit, you will not have been expecting money from them. Am I lying?
Oh, please.
Yes. So the value of goods we sold was 500, but the volume of money we are expecting is 600 Ghana cedis. That shows that we made a profit of 100 Ghana cedis. That showed in the equity. But as I mentioned to you, you don't indicate the profit in this case in the transaction. You just write goods worth 500 Ghana cedis here. Sold inventory valued 500 Ghana cedis for 600 cedis on credit. That's all that you need to write. Please, are you okay now?
Yes, please. Thank you
All
very
right.
much.
You're welcome. All right. So taking B as against C, we have seen that under plant and machinery, there was an increment of 1,000 Ghana cedis. Let's look at inventory. Was there increment or was there a decrease under inventory?
No.
No.
It was the same, right?
Yeah.
All right.
Yes.
So let's go to receivables. Was there a difference between the 2 years?
No.
There
No,
was
please.
no difference. So once there's no difference, we don't have an interest, right?
Right.
Yeah.
Yes, please.
We are only interested where there are what differences. So let's go down to cash and bank. Do we have differences? I mean,
No.
No, we don't.
No.
all right. And the next one is totals. As you already know, we don't need totals, so we
don't
skip
need
the
it.
totals. All right. So let's go down to equity. Equity, has there been differences under equity?
No.
All right. So we don't have an interest. Let's go to loan. Has there been differences under loan?
Yes.
Yes.
Okay. What is this difference? Is the
1,000.
loan balance
1,000.
increasing or it is reducing? 1,000. It has increased, right?
Increase. Yes.
Yes,
Okay.
by 1,000
So
cedis.
all right. So let's look at payables. Has there been a change under payables?
No.
And then the last column too is also a total column. We don't need totals, right?
Yeah.
Yes.
So we have seen that loan, there has been an increment here and also an increment under what? Plant and machinery. What does this mean to us? Our assets, which is plant and machinery, has increased, and also our loan balance has also increased. What does it tell us? Please, if you want to answer, raise up your hand. Let me call you. Okay, I want us to have sanity in the class. So if you want to answer, let's see your hand up, and I'm coming to see the hands. So let's see. All right, who wants to answer? Pearl, your hand is still up. Do you still want to answer this? Or is our old hand?
Please.
All right, so let's hear from you, Pearl.
So the company took a loan of 1,000 cedis to purchase machinery.
That is excellent. All right, that is your opinion. Let's hear from Paulina. Paulina, let's hear from you.
Paulina is a man. Paulina is a man.
Paulina.
Hey.
Yes. Paulina is a man. Al-Hassan, this is Emmanuel. This is Emmanuel.
I know, Mr. Iman. But
yes,
Paulina, but you just say be man.
I be man today.
Hey. All right. So yes, let's hear you.
The lady has said all. The company took a loan of 1,000 Ghana cedis to purchase plant and machinery.
That is very brilliant. So we all agree, right?
Yes.
Oh, Mr. Samuel, you want to add something? All right.
I just wanted to say bought goods on credit or let's say loan. So just like our sister said, I agree.
Okay, so it means the business took a loan of 1,000 Ghana cedis to purchase plant and machinery, right?
Yes.
All right. So, Pearl, please give me your statement again. Let me put it down. Okay.
Okay. So took a loan of 1,000 Ghana cedis to purchase machinery. Plant and machinery,
Okay. Took a loan of 1,000 Ghana cedis. Okay, to purchase what?
Plant and machinery.
Plant Plants and machinery. That is a plant and machinery. Okay. So
okay, thank you.
Is this difficult? I mean, if you see this question, shouldn't you be laughing rather?
The laugh, yeah. If immediately you get the concept, you laugh.
You know.
But imagine you get and then you forget him.
Mr. Lassan.
It is not. Yes.
Can you also state that both plant and machinery 1,000 cedis on credit?
On credit?
Yeah.
No, you cannot say on credit because there are no payables involved. Look at it will only be on credit when there are payables involved. But in this case, there was no payables, right? So you just take to the loan, okay? Just as Pearl mentioned, just write it as you took a loan of 1,000 Ghana cedis to purchase plant and machinery. That is all, okay? Whenever you see a credit, either receivables or payables will be increasing. Are you getting it? That should tell you that it's on credit. Are you getting that? All right. So I think we are done with B and then what? C. Now let us drop B again. Let's drop B and now take C and D. Okay. So now this is what we are taking. We are comparing C as against D. Let's start at the top. Premises. Has there been differences or has there been a change at the premises? Let's quickly do this.
Yes.
All right. What is the difference there?
2,000 Ghana cedis.
Pardon?
A decrease of 2,000 Ghana cedis.
By 2,000 Ghana cedis.
A decrease of what? 2,000 Ghana cedis. So that is premises, right? And remember, when assets are going down, it means what to us?
Yes, you are selling.
We are selling them, right? And also, when assets are increasing, we are buying more assets, right?
Yes, please.
Yes. This is a question for you to play around with. I mean, no hard feelings. So let's continue. Plant and machinery, has there been a change?
No.
Okay. How about inventory? Has there been a change under inventory?
No
change.
How about receivables? Has there been a change?
No
change.
Okay. How about cash and bank? Has there been a change?
Yes.
Okay. What is the change there? Tell me the change there.
There has been an
increase of 900.
1,900.
1,900.
1,900, right?
Yes.
1,900.
Yes.
That is cash and bank. Cash and bank has increased by 1,900. Okay, we have seen that one too as well. The next one is totals. We don't need it, so we jump it. Let's go to equity. Has there been a change?
Yes.
No. Yes.
100.
What is the change there?
Decrease
100.
100.
A decrease of 100 cedis, right?
Yes.
All right. So we have seen that premises has reduced by 2,000. Cash and bank has also increased by 1,900 cedis, and equity has also reduced by 100 Ghana cedis. Let's continue to the end. Loan. Has there been change under loan? No. Right?
No.
How about payables? Has there been change under payables?
No.
Okay. So we have identified premises, cash and bank, as well as equity, right?
Right.
Yes, please.
All right. So what does this mean to us? Premises has gone down, cash has increased, and also equity has reduced. What does it mean?
Try this one.
Buddy, so let me come to you. Let me see those who want to answer by hands. Okay. So who wants to answer? MFR, please, do you want to answer?
I want to answer.
I'm coming. MFR, please, can you hear me? I don't think she can hear me. So, Mr. Minta, let's hear you.
Yes, we can
what
hear
does
you.
it mean?
So, sold premises valued 2,000 Ghana cedis, 4,900 cedis cash.
Please take it
Can't
again.
hear you now.
Sold premises valued 2,000 Ghana cedi for 1,900 Ghana cedis cash.
Okay. Okay. Thank you very much. So, let me see. Mr. Minta has given us his view or his answer. Let's see, Juliana, please, can you hear me? If you can hear me, can you let us hear what you have for us? I don't think Juliana can also hear us. Godwin, Mr. Godwin, please, can you hear me? I don't think Mr. Godwin can also hear me. All right. So, but I believe I can be heard, right? Can you guys hear me?
Yes.
Yes, please.
Loud and clear. So let's go back to our work. I mean, those people were not able to hear me. So let's go and write our transaction down, okay? That is transaction D. Please, let's mute our microphone.
Please.
Please, let us mute our microphone. If you can't hear anything, kindly exit the class and okay. So D.
Gloria, mute your mic. Gloria.
Oh, sorry.
So our answer for D is that we sold premises, right? We sold premises with what was the value of the premises? 2,000 Ghana cedis, right?
Yes.
Okay, you sold premises worth 2,000 Ghana cedis for how much?
For 1,900 cash.
1,900 is cash. We are done with transaction D2. Okay, we sold premises valued at 2,000, 4,900 cedis cash. So now we are done with what? C and D. We are dropping C and we are now taking what? D and E. Let's quickly do this and let's see. Let's start from the beginning again. Premises. Has there been a change? And the premises.
You can't see.
You can't see my screen.
We can see now.
There's no difference.
No, there's
Pardon?
no change.
There's no difference with the premise.
No difference.
Okay, so let's look at plant and machinery.
No
Plant and
difference.
machinery.
No
Okay,
change.
inventory.
No
Hello,
difference.
Alaza.
Yes.
No.
Yes.
I thought there's a reduction in equity by 100. That 100.
Equity. Yes. Equity has reduced by 100 because you sold the premises at a discounted price. Are you getting that?
Okay. So I lost.
You know that the premise was 2,000, but you sold it for 1,900. By all means, your equity will decrease. I'm getting that.
So I made a loss over there.
You have made a loss. Had it also been a profit, equity would have increased. Are you getting that?
All right.
All right. You're welcome.
Hello, Mr.
Yes.
Hello, Mr.
Yes.
The question we just solved, I think we had cash and bank. So why do we how come we drop the bank and then we only focus on the cash side? Then we didn't see anything.
So okay, I understand your question, Mr. That's Mr. Samuel, right?
No, that's Mr. Patrick.
Pardon, Mr. Patrick.
Yes, sir.
Aha. So if you write the premises was sold for cash, you are not wrong. if somebody, you are right, okay. If somebody also wrote that we sold premises and receive the money in bank, that person is also right because it is cash and bank. Are you getting it? It could either be cash or by check. Are you getting that?
Right.
Yes, sir.
So it doesn't matter which one you choose. The most important thing, get your analysis right. Or are you getting me?
All right. Thank you very much.
All right. Yeah. So we could have substituted bank there, and we'll still be right. Okay. All right. So let's continue. I think we have done premises, plant and machinery, and inventory. Let's look at receivables. Has there been change on the receivables?
Yes. Yes. Yes.
Okay. What is the change on the receivables? What is the
It
change?
has reduced.
Okay, it has decreased by how much?
It has increased.
600.
Is it
800
600.
cedis. 850.
750.
Oh, please do the mathematics and give me a correct figure.
750. 750.
750.
We use the calculator.
Yes, 750.
Okay.
750. Please, if you guys are done talking, just mute yourself, okay, please.
All right, 750 cedis. All right, so we have seen that receivables has reduced by 750 cedis, right?
Yes.
All right, so let's move down. The next one is cash and bank. What happened under cash and bank?
Has increased.
It has increased.
By how much?
By 750.
250. By 750.
250.
Hey.
By
250.
By 250.
Calculator.
750.
250.
Please look at the figures. Okay. We have 3750 and 4000. What is the difference?
250.
250.
250.
250 cedis, right?
250. Yeah.
Okay. Receivables has reduced by 750, right? And cash and bank has also increased by 250, right?
Yes.
All right. You know that we don't need totals, so we skip totals column, okay? And we move ahead. Let's go to equity. Was there a change under equity?
No.
Okay. So we move. Was there a change under loan?
No.
Okay, we move. Was there a change under payables?
No.
All right. So what happened here? Yes.
Hassan, please.
Yes.
At cash and bank, the increment is 750, not 250. 4,500.
Hassan, it's 750.
It's 4,500. Wow.
750. 3750 and 4500.
It is 250.
4500. Right, this right.
3,750 to 4,500.
4,000 minus 320.
250.
Okay, so please, it has been corrected. Please, silence. Please, let's be silent. It has been corrected. 4,500, right?
Okay.
Yes, sir.
All right.
Okay.
750.
So let's see. This is where we spotted the differences, right? Yes, these
please.
two. Receivables reduced by 700. Somebody should give me the answer. Let's move ahead. Hello.
Please, we are coming.
Hey, this one too, you are coming. Hey.
Yeah, so.
Can I answer, sir?
Please, I'm trying. Hassan.
Can I try?
Okay, so let's hear you, senior. Let's take the first one to come to you, Mr. Patrick.
Okay, all right.
Okay, so received 750 CDs receivables from 750 CD receivable cashed.
Well, that is a nice try. Okay. But have you ever seen receivables before?
Please, can I try?
But that's it. I'm coming to you. Please. Let me take Mr. Patrick, okay? Because Mr. Patrick wanted to speak before you guys. So I'll come to you guys. Mr. Patrick, what do you have for us?
Mr. Alexa, it means that goods we sold on credit, we have received an amount of 750 cedis cash on goods sold on credit.
From our debtors, from our customers, right?
Yes, customers, yes.
Yeah. So that is very brilliant. That is great. So I mean, the lady who wanted to speak, now you can speak.
Okay, so we see 750 cash from receivables.
From receivables. We don't use receivables again, okay? You can either say debtors. You can either say debtors.
Okay.
No, you haven't received goods here. Here you receive cash. So if you say received goods, you are wrong. Please be mindful. You did not receive goods here. You receive cash rather. Are you okay? So remember, receivables are monies that we are expecting from our customers, right? And we are expecting it from credit customers, those who are owing us. So in the case that receivables are going down, it means those who were owing us are now paying us. Please get it. Are you getting it? It means that those who were owing us are now paying us. We are now receiving cash from our debtors or our credit customers. And where did we receive this cash? We receive it either in a cash form or it was paid to our bank account. So as I mentioned, because it is cash and bank, if somebody say cash, he's right. If you also say bank, you are also right. Please, are we okay?
Sir,
yes.
The receivable has decreased or increased?
Receivables has decreased.
Increased 1,100 and 350.
Yeah, so that's a
Is that it? That is a decrement from 1,100 to 350. Is that an increase?
Yeah, so decrease.
Yes, I was saying decrease. Okay.
1,350.
So that is a decrement. Okay. So now let's put it into writing. Received how much? How much did we receive from our credit customers?
750.
750 CDs. Receive 750 CDs cash. Okay, so as I was saying, somebody will say cash, somebody will say what? Bank. Okay, or somebody will say check. Receive 750 CDs cash or check from who?
Customers.
Debtors.
From credit customers. Yes, or debtors. It's the same thing. Okay, from credit customers or debtors. It's the same thing. Those who are owing us are who we call debtors. Okay, so either cash or check, it is still the same thing. So in this case, let me remove the cash and I will leave check. Okay, so now let's look at the last column, which is
Hello, Mr. Lassa, I have a question.
Okay, I'm listening.
With the receivable, there was a decrease in the receivable. So,
yes.
So
okay.
Yeah. So in this case, since the receivable has increased, has it been any public so whether
please, your line is breaking.
Can you hear me?
Hello.
Hello, Mr. Lassa, can you hear me, please?
Yeah, let's see.
Yeah. Yeah, what I was saying was that since the receivables has decreased, could it be? Shall we know the reason why it has really decreased? If it were to be an increment, then we know that we receive money from our debtors worth that amount. But since it has rather reduced, could it be? How do we put that one, please?
Yes. So, Mr. Patrick, right?
Yes, sir.
So, Mr. Patrick, assuming I owe you 500 Ghana cedis, okay? Hassan owes you 500 Ghana cedis, okay? The 500 cedis I owe you is what you will call receivables. Are you getting that?
Yes, sir.
Okay. Assuming I pay you 400 out of the 500, okay? Will the amount I still owe you reduce or it will increase? Pardon?
It has reduced.
It has been reduced, right? Yes. So that is what you are seeing here. People were owing the firm. People were owing the business 750 cedis, or let's say 1,100, okay? And then all of a sudden, the amount these people were owing the business reduced to 350 cedis. Then it means that they have paid the business or they have made part payment. Is that not it?
Oh, okay.
It is not a full payment because they still they still have 350 cedis left, right? So it means they have made part payment. They have paid some of the debt. Are you getting me?
Yes, sir.
So that is the scenario there. You're welcome, Mr. Patrick.
Okay,
all right.
Thank you.
So let's do the last column, which is E and then what? F. Okay, E and F. Let's see what is happening under E and F. Starting with premises, has there been a change under premises?
No.
No.
All right. So if there's no change, we don't have interest, right?
Yes.
So let's move down. Plant and machinery. Has there been a change?
No change.
No.
All right. So let's move down. How about inventory? Has there been a change?
No change.
No.
All right. How about receivables? Has there been a change?
No.
Yes.
No.
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 All right.
No.
So let's move down.
No.
Cash and bank. Has there been a change?
Yes.
Okay. What is the change here?
800.
800.
800 cities.
Yes, there's a change.
A decrease
All
of
right.
800.
It has decreased by 800 cities, right?
Yes.
Okay, so now let me be inquisitive here. What will happen if you're having money and the money is going down? What do you think is happening?
You are using the money.
You are doing what?
You are using the money.
Maybe
Things
you
with the
buy
money.
or you bought
You are
something.
spending the money, right?
You are paying your
Yes.
expenses.
You are spending the money. Okay, so you can see that we're having 4,500. Now it has reduced to 3,000. It means we have spent some money, right?
Yes.
Now let's see what we have spent this money on. We have seen that we have spent some money. What did we spend it on? Let's continue to see whether we can get that. You know, totals column, we don't need it, right?
Yes, please.
So we skip that one. Let's go to equity. Has there been any differences?
No, please.
There's no differences there, so we move. Let's look at loan.
No.
Okay. No differences.
No.
And then payables.
Yes.
Yes.
800.
It's a decrease.
800.
A decrease of 800.
It's 800, right?
Yes.
And what are payables? Can somebody tell me what payables means?
Money that we
Money we have to pay.
Suppliers.
Money. So please, it's okay. Please, it's okay. Today, I don't know why your vim come like that. So payables are money that we are also expected to pay other people, right?
Yes.
So we have here, we saw that we have spent 800 Ghana cedis, and now we have also seen that the monies that we were also owing people has also gone down. What do you think happened?
We paid for them.
We took money from
We were
bank
able to pay
to
them.
pay for
Money from the
to
bank.
pay.
So as a,
To
okay, so let me
pay
ask this question. As a
payable.
business, please pay attention. Let me ask this question. As a business, who do you owe?
Your
Who do you
supplier.
buy from?
Suppliers.
You buy
Your
from your suppliers, right? Aha.
Yes.
So all things being equal, if you are going to owe, you are going to owe your suppliers, right?
Yes.
What
So
about loans?
always payables. Pardon?
What about loans?
Loans, I mean, loans is a liability, but we are speaking from the point of payables. Are you getting it?
Very well, very well.
Aha. So, what was I saying? It's even gone. So, we have seen that we have spent some money, and now we have seen that we have spent it on payables. We have tried to reduce the amount that we were owing our suppliers. So now, what is left for us to do is to just put it in written, or we should just write it down as a transaction. So, what transaction are we going to write here? Can somebody give me, just one person, how we can write this transaction?
Paid 800 cedis.
800 cedis. Was paid to
Payables.
Okay.
payables.
So the statement that we are going to write here is that we have paid what? Paid suppliers, okay? Paid suppliers 800 cedis cash, right?
Yeah.
Supplies 800 Ghana cedis cash. If somebody also say bank or check, that person is still right. And I think we are done with the whole table. That's all that we need. So look at it. How many? 1, 2, 3, 4, 5, 6 sentences. And you are done with the whole table. You might have been scared with these figures, but look at all that you need to do. Only 6 sentences and you are good to go. Is this difficult?
Yes.
Hey. Yes. So I think we are done with the whole figures, that table. No, we are done. This is how we go by those tables. Anytime you face this question, you just, yes, I'm coming. You just need to be doing the comparison and then you deduce meaning from that and you write it as a transaction. That is all. There's nothing difficult about that. Yeah. So Mr. Abraham, let me hear you. Or Fiayomi.
Hello, sir.
Yeah. Yes.
Hello, please. The D. I want to understand why we were with 2,000. The 2,000 that appeared in the D. I don't understand where it came from. The D.
You don't understand where the D. You are referring to this one, right?
Sold premises for 2,000. Sold premises worth 2,000 for 1,900. I don't understand where the 2,000 came from.
Okay, so
yes, because on the table I saw 2,000 on the table.
Hello.
You saw what?
Zaza.
Okay.
Hey, one at a time.
Please look on your screen. Okay. We compare C against D. What was the initial value for premises?
Hello.
Hello. Can you hear me?
Zaza. It's 12. Yes, please. I have a question.
Pardon?
12,000. Is the 6,000.
12,000.
I think your network is not helping.
Please, can you hear me?
Hello.
Please, let me take you one by one, okay? So the person asking the question, I'm asking you, are you seeing on my screen? Can you see my screen? Yes.
Yes, sir.
Okay.
Yes,
so what was the initial value for premises? Was it not 12,000?
Yes, please.
And then the following So let's assume C was the previous year. So let's say C was 2024. Okay, we are now in 2025. Okay. So
sir.
in 2024, premises value was 12,000, but this year, 2025, the value of premises has reduced to 10,000. What is the difference, please?
Okay, 2,000.
2,000.
2,000.
And you also know that premises is an asset, right?
Sure.
And whenever assets are going down, it means we are selling them. That is the assumption under equations here. Are you getting that? And also, when assets are increasing, we assume that we are buying more assets. Are you getting that? So for the fact that premises has decreased by 2,000 in this case, it means we have sold premises that was valued at 2,000 Ghana cedis. Are you getting that? Please, are you okay now?
Yes.
All right. All right. Thank you. So I think somebody also wanted to ask a question. Yeah, hello.
Yes.
Is that Tisha speaking?
Yes, please, it's Tisha.
Okay, so let me hear you.
So I wanted to ask with the last one, that's the F, can you also say paid 800 cedis worth of cash to creditors? Can you put it that way?
Yeah, you can also put it that way. Once the value you mentioned there is right, it is 800, and you have also mentioned the right beneficiary of that money, which is suppliers, you are good to go. Okay?
Okay.
You know, that's why we say English is dynamic. I mean, you cannot have everybody speaking the same English, everybody there in English, you understand?
Okay.
But the most important thing is that you capture the key elements in that English, that is all. So that's why I said, I want you guys to understand the thing. When you understand it, you'll be able to write it in your own English and you'll still get the mark that you deserve, okay?
Okay.
Yeah. So let me take Code. Code, please, can you hear me? If you can hear me, let me take you. Enam, if you can hear me, please, let's hear you, Enam.
Okay, so I want to ask, can't we write it like the first one we did, the one without the table? Can't we write it like that for the table?
No, I don't get your question, please.
Okay, so you see the one without the table, we're writing increase in assets and we put cash into brackets.
This
So I'm
one.
asking, can't we do it like that for years?
No, you can't do it this way because with this particular one, we were given the transactions, okay? And we were asked to write the effect. So what you are seeing here, that increase and decrease, no, were the effects. Are you getting me?
Yes.
But now they have given you these effects rather. The table you are seeing rather is the effect. Are you getting me? And then now you are being tasked to write the transaction rather. So this one is the opposite of the one we did the last time. Are you getting me?
Yeah.
Okay. So all that you need to do is to write the transaction for them. Okay. When they give you the table, write the transaction for them. When they give you the transaction, you write the effect. As simple as that. I hope you are okay.
Yes, please. Thank you.
Oh, you're welcome. You're welcome. So I think we've been able to digest or achieve the aim of the day by looking at these two areas of accounting equations. Okay. Please, your camera is on. Please take off your camera. Okay. Doris. So, oh, Charlie.
Yeah,
He's the one for
When you free me, if you are done.
So I think let's leave her. I mean, maybe it look as if she's not with us. So as I was saying, the last time we looked at a situation where we'll be given transactions and then we will have to write the effect. We did that 3 days ago. Today, we have looked at a situation where we'll be given a table and we will have to write the transactions. And you have seen how we should go by it when we have this particular thing. First of all, we need to compare 2 years, the previous year and then this year. Okay, so what we just did, when we took the first one, which was, so this was our previous year, we compared this against A, okay? We did this, okay? So the empty one was our previous year, A was our current year. We compare to spot the differences. When we are done, we drop the empty one and we now take A and B. A now becomes our previous year, B becomes our current year. When we are done, we drop A2 and we take what? B and C. B becomes the what? Previous year, C becomes current year. We compare and spot the differences. That is what is going to help us to write the transaction. And when we are done, we take C against what? D2 as well. C, in this case, will now become what? The previous year, and D will become the current year. This is what you do to the end, and you have your statement to write, just as we did here. So I think we are done with equations. If you are following our discussion very keenly, and you are really understanding the concept, there's no question that will come from accounting equations and you'll not be able to answer. That is the bottom line for today. What we've just did, if accounting equation question is coming, it's either what we did the last time or what we are doing today is going to come. And each of them, when they come, you should be able to answer them. That is the bottom line. Please, any question before we all leave and go and rest?
Please share the screen again.
Please, when are we meeting? When is our meeting day?
Yeah, so we are meeting tomorrow, okay?
Wait.
Okay.
We'll meet tomorrow to continue. Yes, we are meeting tomorrow.
Hello.
We are meeting
tomorrow. Or
yes.
online? Please.
Pardon?
Have the recording. Is it face to face or online?
No, it's going to be online, okay? Same time. Tomorrow is Friday. Tomorrow is Friday. So,
hello.
Yeah.
I like that.
Yes.
We put in the IA.
Pardon?
We'll be posting the IA tomorrow.
Yes. So if they post it, I mean, we will be doing the IA on the 15th. Tomorrow is 14th.
All right.
Right? I mean, tomorrow is 14th, and the IA will be on the 15th.
Okay.
Yeah. So we'll be tomorrow. Yeah. Pardon?
HASSAN'S is my suggestion.
Is there going to be a class or something?
Is it going to be what?
Like, are you going to have a discussion about economy?
Economics? Well, you know, we've been doing that for some time ago, but as we're getting closer to exam, I think our focus will be more on the accounting. But if they need be, we'll convene to do microeconomics too. Okay?
Try.
We'll convene to do microeconomics too. So, yes.
And don't worry yourself about it.
Bring back the answers again. Is it the mode of writing? Is it online or face to face?
Which one?
The IA, the accounting IA. Are we writing it? I think we are going to the school to write.
For now, what we know is that it's going to be on Sakai. That means that it's going to be online, right? Whether it will be off-site or on-site, we are yet to determine that. But I strongly believe, I am not telling you it's going to be off-site, but I am seeing that it's 95% going to be off-site. Okay.
Amen.
You say,
yes.
You say.
So let's just keep our fingers crossed and see the final decision that the examiner will take. Okay.
Okay.
Hello.
Okay.
Hello.
All right.
Please, the one we just saw, show the answers again.
I should do what?
The one we just saw, like bring the answers back. I'm writing.
Please,
you are
so
writing it. Sorry, I will share it on the platform. Okay.
Okay.
I'm not
I'll share
on
it on
that
the
platform.
platform.
I can't see it. I'm not on that platform.
Are you not on the accounting platforms?
Yes, but when they send something, I don't get it. My phone is full.
Hi. So how do you get this link? Hello?
Yes.
All right.
Hello, Hassan,
So
I have a suggestion to make.
I want a spiritual link.
Yes, the one with suggestion. Let's hear you.
Okay, so please, with regards to what we just did, my suggestion is, can you please give us a sample question for us to try our hands on?
For you to try. Don't worry. I've heard you. I will give you a trial question, okay?
Okay. Thank you.
All right, thank you. All right.
Hassan.
I think yes.
Hassan.
Yes.
Please. The next time you will be taking us to microeconomics, it should be multiple choice questions so that we'll be familiarized with the question.
I've heard you, Mr. Eva.
Yes,
Mr. Alasan, thank you.
Don't worry. So please, I think we are done for the night. I thank you all for coming, for making time for the discussion. Yes.
Mr. Alasan.
Yes.
Please, will you put the audio recording of the class? I couldn't join early today.
Yes, so the video recording will be shared on the Telegram page. Please, are you on it?
No, please.
Oh, so we